A Spanish 10-year bond auction attracted good demand, but borrowing costs increased. Solid earnings reports out of the U.S. from the likes of eBay and VMware is helping to boost stock futures higher. I'm Taylor Schranz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. It's been a choppy week for stocks. Yesterday, the market was down after a big update on Tuesday. We've gotten really a mixed bag of earnings, Scott. What are you seeing?
I'm still seeing a nice bounce off the lows. And Tuesday we had a nice strong day. And yesterday we came in, I was like, what kind of day are we going to have? How much of Tuesday are we going to absorb? So if you look at the chart of the SPX, you will see that I see two patterns here, one concerning and one decent. So if you go to the chart, you will see here's the macro trend line that we came into and we tested back on that Tuesday low all the way back from April 10th. Since then, we've had a nice methodical bounce to the upside, but what we've only done is retested this broken trend line. So right here, we're coming into a pretty important zone, right into that 1390 to 1392 area. If you look at yesterday's action though, yesterday from a short-term level was a bit constructive because if you look at Tuesday, you had a big move. Yesterday was just an inside day, so we absorbed it, held the majority of it. So it'll be interesting today to see if we can get above that high of 1392 and not only get above it, but stay above it. If we can stay above it, I think it's constructive. I think today's action is going to be pretty important.
And today, the market is up, like we mentioned, and part of that's because there was a Spanish debt auction that came off pretty decently. Demand was good. It wasn't great, though, Scott.
It wasn't great, but out of Europe, I don't think we need great. I wrote an article today saying we just need decent, not drastic. Anytime we get decent news out of Europe, we respond well. As long as it's not a new drastic piece where we have to absorb it, I think we can continue moving to the upside.
IBM and Intel yesterday were part of the problem. Those stocks came down, even though earnings weren't so bad. They just didn't meet investors' expectations.
Right, and that's what you have to know. You have to know the expectations. And we came into it, IBM was strong, Intel was strong. IBM, I talked about the earnings not being as quality. We talked about 201, 202. If you look at IBM, it broke that area. It was weak all day. It broke this 202 zone. Closed on the 50-day. I think the next level to watch on IBM is about 195, 196. Intel did hold up a little bit better. I thought the quality or the report was much more quality. I know people were concerned about the margins, but I think the margins were still great. Held the 50-day, so that was okay. So if you look overall at the pattern of the Qs, I think it's very interesting. You see a descending channel. So we've been in a corrective phase. We're only about 3% off the highs. We held the 50-day. So overall, after a huge move like this has been very tradable, very constructive, not devastating. So let's see if we can get above 67 and hold. If that's the case, some people might need to position in, but at this particular point, I still think we need more data.
Another industry group that's been in focus this week is the financials. This morning, Bank of America came out with earnings, and the stock's trading up about 40 cents.
Yeah, well, that's a big percentage move for Bank of America. But if you remember, JP Morgan had a strong report, and it opened up, and they sold it. Goldman Sachs, decent report, opened up and sold it. So today, watch to see what they do with Bank of America. If you look here at the chart of Bank of America, you will see it's had a nice move from $10 all the way down to the 50-day, which it held. This was a little pivot area where it could have been bought above 9. It's opening around 950 into resistance. See if it's a gap and go, which would be healthy for the market, or if they open it up and it just fades. That's something I'll be watching for today's composure.
And in the longer version, we're going to talk a little bit more about the financials and the tech sector, the Qs, but we'll also get into some of the earnings that came out last night, like VMware, I think.
Yeah, and FFIV and eBay. So it's been a very stock-specific tape, a very stock-specific trade. So we'll go into more depth in the long form. We'll see you then.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.